Well, investors often think of products as being expensive or cheap when they're getting into them, but traders may have a different idea of what that means. Our guest today is Anthony Drager. We're going to talk to him about how he trades things like gold that may be close to all-time highs and whether that matters to him or not in his trading decisions. So, Anthony, thanks for being here.
Thanks for having me, Tim.
All right, so let's take gold as the example. I mean, it's reaching all-time highs here, and people are thinking this is a bubble. What are your thoughts on that?
I always get a kick out of people at the beginning of a year. They want to know, it doesn't matter if it's gold or the Dow. At the beginning of the year, you always hear, where's the S&P going to close, or where's the Dow going to close at year end? And they'll always give you an answer. But nobody knows what's going to happen next. And for me, I'm an intraday trader. So I want to know what's going to happen in the next 30 minutes, sometimes the next 5 minutes. And I don't carry overnight positions. So while I'll have an idea and I know that gold's on all-time highs and I know it's approaching 1,300 and there's psychological levels, when people start answering what's going to happen in a month, in a year, they really don't know. There's too many unforeseen things that could happen, that will happen, that'll give them an excuse of why they're wrong. So it doesn't really matter. The further out you go to try to predict, the less accurate you're going to be.
When you are trading on an intraday basis, though, does it come into your mind that if I go long here, I'm going long at an all-time high? Does it factor into your decision?
It will if it's a big psychological level like the 1,100, 1,200, now 1,300 in gold. And sometimes even the even $100 areas will play a factor. It's not, sometimes it'll cause me to reduce my size and therefore manage my risk because those levels might be there. And a lot of people think the first time to 1,300 is resistance, and you get a lot of people selling, and sometimes it is. But again, it might, a lot of people will get caught up in, selling a market that's going down and losing money, buying a market that's going up and losing money. You could do that. That happens in a volatile market like gold, like crude oil when it went to $146 a couple years ago. Same thing's happening in gold. What gets me is that there's a lot of gold commercials. People want investors to buy gold. Where were they 4 years ago when it was half price? Now you hear them at $1,200, $1,300. Could it go to $2,000? Sure, but nobody really knows, and that's why my whole strategy is all about what's going to happen today, what's going to happen in the next couple hours based on what has happened maybe overnight and the day before.
So even though you're maybe trading a little more frenetically and because you're in and out very quickly, for you that's a more of a comfortable way to trade.
It's a better way to manage my risk. I put my head down at the pillow at night knowing that I'm flat. And so the geopolitical events that could happen and affect stock markets, energy markets, even metal markets don't affect me. So all my positions are closed at the end of the day. Am I a scalper in and out in seconds? I used to be. Now I'm considered more, I don't even know, maybe a swing trader where they're in the market for 5 minutes or 30 minutes. Seems like forever for me, but it's still a very short-term strategy. And again, it's like someone trying to predict the weather. They have a better chance of telling you what's going to be tomorrow than next month.
Anthony, thanks for your time.
My pleasure.